To chat with you today. So thanks for having me. So like Shawn said, my name is Sara Halickman. I'm a CPA and an insurance manager with FL. I started actually as a summer student with FL in 2011, and I stuck around ever since. I started as a staff auditor in our assurance department because we're a mid-sized firm. That means not only doing audits and reviews, it also means, being involved in tax planning, tax preparation, estates, not-for-profit, across the board. More recently, I've shifted my practice a little bit away from, being solely based on assurance and a little bit more into the tax area. So that's been a big shift. And I think, Shawn, like you mentioned, with COVID and everything going on, there are so many tax implications and tax questions. So it's kind of been an interesting time to be a little bit more focused on that in my practice.
Excellent. And obviously, such great experience early in your career. Where do you see the next few years at FL taking you? Like, do you have any ideas of maybe a specialization or more focus? You talked about tax being a big one. Where do you see, you looking to expand your knowledge base in the accounting world?
Yeah, so I actually am starting to work on a specialization in the trust and estates area and getting a TEP designation. Shifting my practice again a little bit more towards tax, but because of the nature of our firm, because of the nature of my clients, I think I'll always, be able to be involved a little bit everywhere. I don't tend to specialize in an industry. Rather, we specialize more based on client size. It's all small owner-managed businesses, which provides us with a lot of opportunities for planning when it comes to family planning and estate planning and personal planning and things like that. So again, more in the tax area, but because of the type of clients we have, I'll be able to continue to be involved A to Z.
Excellent, and that's a big reason. We have a lot of synergy. That's a big focus of ours, tax and estate planning, and it can get very complicated if the client is a business owner or if there's a big family estate to settle. So part of the reason I wanted to highlight you today is that expertise and that precision that you offer with your firm. So let's get into the topics that we wanted to discuss today. So obviously 2020 has been a year like no other. We've seen COVID-19 was the big story. But we also saw earlier in the year there was an oil price war between the Saudis and Russians. We've seen things like Black Lives Matter, social justice, equality, the US election, really just kind of everything hit all at once in 2020. But all that considered, normal life as we know it has probably changed for the foreseeable future. And in terms of individuals and business owners, I mean, that probably changed where they were physically working. Probably a lot of people shifted to remote or work from home. So when you're talking to clients, be they employees or business owners, what kind of tax considerations should they be looking at for 2020 when they're filing their tax return for the year, given that change?
So you touched on a few of the biggest things. So for the first time in many years, I think a lot of people who probably did the same thing every year for their tax return had questions because things changed for them. Either they were suddenly eligible for the CIRB, they're now working from home. Can I deduct these expenses? So I think, like you mentioned, a lot of people worked from home for at least a part of the year, which factors into their personal tax return potentially. We'll get to it in a second. The Canadian government made a few announcements yesterday that we don't have a ton of detail on yet, but without any changes at this point, if you wanted to deduct home office expenses, your employer would have had to fill out a form for you, actually two forms, one for the federal side, one for the Quebec side, saying that you were in fact required to work from home based on your job description, based on your responsibilities, and that would entitle you to deduct certain expenses. So let's say a prorated portion of your hydro, a prorated portion, of any minor maintenance, things like that. Some office supplies, not all. If you are a renter, potentially a portion of your rent, all based on the square footage, let's say, of your office to the rest of your home. There was discussion that CRA would streamline this form because it is quite cumbersome for an employer. Let's say an employer has 100 employees, to fill out 100 of those forms can be pretty tedious. So there was talk that it would be streamlined. And more recently, actually yesterday, the Canadian government announced a $400 credit. Very little detail so far, but it seems that Taxpayers, if they were required to work from home in 2020, will be able to will be able to claim, I guess it's almost like a blanket $400 deduction in their tax return, kind of acknowledging the fact that if they had no major expenses, that'll, cover a portion of what they would have had to incur personally. Again, not a lot of details yet, but it does seem, based on what they've said so far, that they're not going to ask for much in order for you to be able to claim that credit. So I would say, obviously more details to come, but if you have been working from home for part of 2020, I would put that on your list of things to be aware of when it's time to either speak to a professional to prepare your tax return for the 2020 year, or if you're going to be doing it yourself, to look into it. I guess what'll be interesting will be to see if, let's say, you had a significant amount of expenses, or maybe your portion of expenses would have been more than that 400. Is it worth doing the work to figure that out, or is it better to just take this blanket deduction and run with it? So basically, the way a deduction works, for those that don't know, is that it'll reduce your taxable income. So basically, the government's saying, here, take $400 off. So I think that's something that'll be really interesting to see what the options are, if some employers may still go ahead with this, these conditions of employment forms to allow people to claim their home office expenses. I think in some cases, there have been plenty of expenses incurred by employees, whether it's been supplies or, they've had to up their internet, things like that. So it'll be very interesting to see how different employers react, or say, this is what the government's giving you, like, you're good to go, I'm not getting involved. So that'll be very interesting.
Cool. Well, no, that's very informative. And obviously things like TurboTax, you're able to do your own taxes and things like that, but the knowledge of a professional like yourself, you can help identify and probably have a little bit more in-depth knowledge. So obviously a huge benefit when dealing with a year like this, probably a good year to start working with an accountant if you aren't already. So now, less on the tax side, more on, you and your industry and my industry, quite frankly. We're in a service sector. A lot of what we do is based on the relationship we have with our client, and that may apply to some of our guests today. So, based on how you've reacted with your clients in 2020, how do you feel the dynamic has changed, if it has? Do you think that the change to remote kind of technology-based meetings has been well received by your clients? Like, what are your thoughts on and feelings towards that?
It's interesting, and I find it's really dependent on the client. Some clients, not much has changed. We'll speak on the phone like we always spoke on the phone. I have some clients that actually, until this year, they're in the States, and I never even knew what they looked like. And now, for the first time, because now we're doing video calls for everything, we're suddenly doing a video call and kind of quote unquote meeting face to face. So that's been really interesting. I think different clients are comfortable with different things, which has been very interesting. And for our clients who never went home, they were considered essential businesses. They continued working from their offices. Not much has changed for them. So it's been interesting, whereas, they know that we're all home and we're all in different places, but their business hasn't changed. So it's been interesting to understand, what works for them, given that, right? Like, they're all in their offices. They can still go through documentation, get us what we need. But then, on our end, we have to receive it electronically, or somebody has to receive it at our office. So logistically, it's been a very interesting year, and we've tried to make it as seamless as possible for clients. I mean, look, we do have clients in their 90s who don't have a computer, cannot sign things electronically, right? So it's been very interesting to really understand the position the client is in and try to make it work for them as easily as possible.
Yeah, definitely. And like you said, right, there are some people that maybe they're facing this technological hurdle for the first time in their life, and you're dealing with their tax returns, or you're dealing with tax preparation for their business. Like, these are very sensitive matters, and it's got to be done delicately, and you've got to be mindful of the fact that some people haven't been working from home, some people have been exposed since day one. So it's definitely been an adjustment, but I'm glad to hear that some clients have embraced it in a positive manner. So you touched briefly on the CERB, the Canada Emergency Relief Benefit. Obviously, the government programs that have been introduced have either now changed, they are changing, some are going away, some are being replaced, etc. So we saw the CERB, we saw the emergency wage subsidy, we saw the rental relief, etc. So, at first, the first topic I want to kind of focus on with regards to those programs is maybe you could just give us a brief overview, what is the CERB, how did it work, and what are the tax planning considerations that people who receive the CERB should have, because I think some people had maybe some misconceptions about it and misunderstanding. So we want to make sure that we inform as best as possible.
Yeah, so the CERB was basically, very early on, the Canadian government said, look, we're not putting everybody on EI, we're not doing something complicated, because EI is based on a calculation of your income and what you're eligible for. And CERB was basically a blanket benefit to say, here, everybody gets it, and we'll figure it out later. Obviously they were, it was an emergency. It's an emergency relief benefit, and they had no choice but to launch something very quickly. But what that meant was that over the course of however many months, and it's only recently transitioned back to kind of a program that is more in line with EI. The CERB was, a $500 check every week. I mean, $2,000 a month, and it was, you're not working, you're entitled. And then it expanded a bit to people who are working. You could qualify for an amount if you were working less than your kind of 100% capacity, and so on and so forth. The thing with the CERB is that no tax was withheld, and it is a taxable benefit, just like EI would be taxable to you. So I would say for anybody who received the CERB over many months, chances are you're going to owe some tax, especially because ideally you were probably working up until the point that you may have been furloughed or laid off, which means that you would have had some other income. And if you received the CERB for all of the periods, you're at the threshold where you're going to owe some tax. Depending on what your income was for the rest of the year, depending on what your other sources of income, that amount may vary. So, it's hard to say like, oh, just make sure that you put $500 aside. That's not necessarily representative based on everybody's situation. But again, now is a good time to take stock of, what you earned in the year, what did have a withholding on it. So, for example, salary prior to, and, if you're back at work now, wonderful. There's probably obviously being taxes withheld versus the CERB where there was no tax withheld, and kind of seeing, what would I pay in a normal year? Where am I? What should I expect to pay? There's planning opportunities there as well, right? You can make a contribution to your RSP until the end of February 2021. If you're going to owe a little bit of money, would you rather pay the government, or would you rather put a little bit into the RSP to offset that? So there's a planning opportunity there. They can speak to you about that in their RSP. The other thing is that, and there have been, rumors that maybe things will change this year. Maybe, who knows if we'll have to submit our tax returns again on time on April 30th. Like, there are already rumblings that maybe deadlines will be moved and, there will be some relief available. Who knows? But generally you have until April 30th to file your tax return. And even if you file it on March 1st, you still have until April 30th to pay the balance. So the earlier you kind of have an idea of your tax return being done, you still have a little bit of breathing room to pay whatever balance is owing. And again, I can't, you're not, realistically, if you were qualifying for the CERB, you're unemployed for part of the year, you're probably not paying 50% tax on the CERB, but it is good to know in the back of your head that there will be some money owing and that cash needs to be available to you.
For sure. No, that's great to know for the individual. And then obviously on the business side, there was the emergency loan of 40,000, things like that. So, that or the wage subsidy, like maybe one that you would want to highlight for business owners. I mean, the loan was obviously a big one that I think a lot of businesses took advantage of. And in speaking to some of my business owner clients, it's one that we looked into. How has that program, if it has changed or if it's going to change, like maybe just a little spotlight on that one?
Yeah, so actually when the loan was first available, the criteria were a little bit stricter. It was loosened a little bit and it became more widely available. And I would say like a ton of businesses qualified for it. And it's super attractive in the sense that 10,000 of it is forgivable if it's paid back before, if I'm not mistaken, I believe it's December 31st, 2021 or 2022. Don't quote me, I would have to check. But 10,000 of that is forgivable. So, we had a lot of business owners who said, look, I'm going to qualify. I'm going to take it. It's free money, essentially. I'll make sure that I have the cash available when it's due. that $10,000 is taxable, is like taxable income, because if the plan is that it will be forgiven, it is income to you. But again, it's money you wouldn't have otherwise had, and obviously, it's being given to you. $40,000 is being given to you because you qualify. So we highly recommended that any of our clients take advantage of that. The same with the wage subsidy. The wage subsidy calculations are a little bit more complicated, and those have evolved over time. Yesterday in the CRA's announcements, they announced kind of the next period, which, if I'm not mistaken, takes us through till March 2021. But again, if you qualify, like, that's, those are government funds that are available to you. They should be taken advantage of. Absolutely.
Excellent. Oh, that's great insight. So now, like you said, CRA is kind of talking a little bit more, telling us what we could be in for. And we obviously talked about a historic deficit, and one that we can continue to run for the foreseeable future. As a father of three, I'm looking more at my kids and maybe their kids as the ones who are really going to take the brunt of this. And in our industry, I mean, what we've heard rumblings of is really the capital gains inclusion, talking about, any non-registered securities you sell, or second properties, things of that nature. You have to pay more tax on any gains you have. In terms of, what might be done to recoup some of these, some of the revenue needed to actually cover these programs, what else has CRA hinted at, or what else has there been rumblings of, maybe besides the capital gains inclusion tax, if anything, that, it's still very early, and like you said, yesterday's press conference was maybe a little bit vague at the start, but has there been anything that's maybe come up that is worth noting?
So the capital gains tax is huge, and I think that's like the biggest thing we keep hearing is, like, instead of a 50% inclusion rate, will they raise it to 75%? Will it be changed at all? I did see that the TFSA limit is $6,000 for next year, so that doesn't seem to be going anywhere so quickly. So that's income that's protected. I think also it's not so relevant to everybody, but the employee stock option plans seem to be a little bit more taxable than they have been in the past, and it's quite complicated, and I definitely won't pretend to be an expert on it, but I think, that's where they'll be deriving some revenue if it's more taxable. And Montreal especially is like the land of the startup, so that's a nice way for them to cash in a little bit. It's interesting though, because, to be quite honest, like, interest rates are so low, some people are speculating, like, oh, well, maybe Canada just won't pay this, we'll just keep amassing debt, and, like, we won't really worry about it. And I mean, then I agree, like, your kids and your grandkids, like, I don't know if there will be pensions or what there will be, but Canada has made it very clear that the debt levels have not been like this, like, since, like, the Second World War, and the measures they took at that point. So aside from the capital gains tax, I mean, nobody really knows what it will look like. I mean, so the other thing that CRA announced is that there'll be more sales tax on, I guess not more sales tax, but more things are becoming sales taxable, if we want to call it that. Netflix will be subject to sales tax. They're going to look a little bit more specifically on the values of sales tax on imported items, on, like, digital items, things like that. So these are all places where CRA can recoup a little bit. I mean, recoup billions and billions, I don't know. But who knows? I mean, in the States, like, you don't have a principal residence exemption. Is that something they would look at? So it'll be very interesting. I think we're a ways away. I think the government is still spending on it, so I think it's maybe a bit premature to figure out how they're going to get it back now. But I think there are potentially a lot of options for there to increase taxes in certain areas. I mean, it'll be interesting if, Justin Trudeau's not going to be the prime minister forever, so if someone else comes in, may have a very different view.
Yeah, I mean, look, we saw that when Trudeau first came in, right? Like, you hit on the TFSA, and that was one that I wanted to speak about. When Trudeau came in, the TFSA limit for that year was 10,000, and he dropped it right back down to 5,005. So, that's a question we get a lot. TFSA going to be around for the next few years, because we're doing financial planning and all this, and we hope the answer is yes, because it's a nice haven for our clients planning long term. But you're right, it is dollars and revenues that's left on the table. And you touched on the home exemption. I think that's one that I hope that it's not one that comes to the
And
forefront.
it's one that we all really take for granted, right? Nobody thinks about like, oh, when I sell my house, like we all know that when you sell your house, you're fine.
Never. And we do that admittedly in financial planning. I don't even think I ask clients what they paid for their house. It's good information to have, but when unless they have a second property, it's very important. But all that to say, that it will have to come due at a certain point, and you've touched on a few good ones. In terms of any other trends or maybe considerations for 2020 taxes before we jump into the question and answer period, is there anything else of note or a topic or trend or anything like that you would want to touch on before we wrapped up today?
No, I mean, I think market-wise, it's been a very interesting year. Like, I don't need to tell you this, obviously, but I think, for a lot of people in maybe non-registered accounts, they're looking at some big ups and downs. So, if you had some really great Lightspeed shares and you sold them at a huge capital gain, I mean, and it wasn't in a TFSA, maybe there's, I would say important to consider if there's any planning for things you did in your portfolio this year that, may trigger big tax that by the time you get to next April, you will have forgotten about. I think aside from that, I mean, look, I think that this home office thing, there will be more clarity in the next little while, and that'll be really important for people to be aware of. People were very generous this year in terms of donating to causes that were important to them. You mentioned Black Lives Matter and all these different things. So, holding on to those donation receipts and making sure you're claiming them. Medical, the general medical expenses, childcare expenses, all these different things will factor in. And I think for a lot of people, it'll be a very abnormal year because they weren't necessarily working or they were working reduced, or, we're talking about a lot of women dropping out of the workforce right now. They're not necessarily going to have income. If you're dropping out of the workforce, you can't really claim childcare expenses because you work for your child. So different things to think about in terms of personal situations, but it's really, I think, going to be a really varied year for a lot of people versus what their norm would be.
Yeah, and as you've highlighted, I think the importance of working with a tax professional such as yourself will really provide that assistance and that guidance come tax time next year. So Sara, thank you so much for your insights today, and I'll open up the floor to any questions. Just a reminder, this is being recorded, so let's keep it PG. I'm just kidding. But in all seriousness, if anyone has any questions, please feel free to unmute yourself. And you have Sara to pick her brain for the next couple of minutes. Not everybody at once. Oh.
Hi, Sara.
Hi.
Can you hear me? Hi, this is Siragan. Thanks for the call. I had a question regarding something that myself and a lot of my friends, independent consultants, are sort of grappling with, is that most of the time accountants are just preparing their taxes for that corporation, but they don't necessarily give advice on a more optimal way of structuring, whether it's dividends or salary, etc. I'm wondering are there specialist accountants who deal with that, or any normal CPA or CA should be able to provide at a minimum some efficient way of doing their taxes?
It's an interesting question. I mean, every CPA has different areas of, I guess, expertise and knowledge and what they're comfortable and not comfortable advising. I would say, not to brag, but any CPA at FL could probably advise very efficiently on that. But sometimes if it's not something a CPA is experienced in doing, if they're very comfortable, let's say with sole proprietorships, and independent, like you mentioned, an independent contractor who maybe doesn't have a lot of complexities in terms of corporation and structure, they may not be available. They may not be able to, comfortably advise on that. And I would say, maybe at that point it's a discussion to have with them, like if they know, or if they're comfortable, or if they can maybe point you in the right direction.
Thank you.
No problem.
So that was an excellent question. Thank you very much. Anybody else? Last chance. So I know I'll ask the question that everyone's asking. No, Sara and I did not coordinate wearing the same sweater today.
It's honestly, and I told you, Shawn, this is the second time it happened to me today. So everybody had the same thought when they got dressed this morning.
So look, guys, Sarah, with your permission, would it be okay if I shared your email address with everybody if they had any questions? You know, Siragan, if you maybe want to follow up with Sarah, you know, I can definitely attest to not only Sarah, but FL as a firm. We have a lot of clients that deal with them. I've had the experience of working with Sarah on a file in the past. That kind of question, that kind of strategizing is the reason that I have Sarah today, and that's the reason that we continue to work with FL. So definitely worth it. So Sarah, just remind me, it's S Halickman at FL.
Montreal.com. Yeah.
Perfect. So I'll be sharing that in the chat. If anyone has any questions for Sarah specifically, it's there right now. So again, everyone, thank you so much